have topics they want me to cover during today's evening session, then go ahead and post it in the Zoom chat. The one question and topic I have so far from somebody was how I flip through and determine what's going to be a good swing trade for like equities, or you could do for leaps as well. So I'll go ahead and cover that one. Usually, we also do like a couple of case studies, which are trade reviews and recaps that are based off of Heatseeker setups from the prior week. John Wicks, somebody on our success team, has some very, very good examples of that, including the SPX bounce trade off of 66.30 on Friday, all the way up to 66.70, a 40-point punt, which would have net you like 2,000% on contracts if you had the balls to hold it. So don't miss out on any of it. Go grab a drink real quick and get ready for the session. Yeah, that shit was incredible, dude. V-shaped recovery. All right, I'm gonna go ahead and kick it off. So the first topic that people were asking about was what is the best way to identify what is a good swing trade to take? Okay, so I actually have an example off of the top of my head because I was thinking that Lululemon would be like a really, really good swing trade because it had dropped so much. So let me just go ahead and pull up an historical map real quick of that map because I remember when I saw it, I think it was on. I think I saw it on the 15th of September and the map looked really good. And then I told Keon that I was going to take it tomorrow or the next day. And then I forgot. So, I remember that one fresh off my mind, but yeah, it did pump 10 points already. So it's up a pretty good amount. Let me just go ahead and review what the chart looked like with you all. Okay. And I'm gonna, hold on. Let me mute everybody real quick. All right. Everybody's muted now. All right, so let me go ahead and share my screen real quick. So one of the things, as I was suggesting, is that so the difference between Gex and Vex is that Gex is generally better for like short term and like 0 days and weekly expirations. Generally, like Vex is really good for like speculative swing setups. When I say speculative swings, what I mention is that sometimes it'll show like incredible directionality and like really, really good risk to reward trades going out like 2 to 3 to 4 weeks into the future. So generally, when I'm looking at trades, I look at the GEX and I depend on it very heavily for like more short-term price action, where if I want to predict and forecast where price is going to go in the future, I start to integrate Vex into it pretty significantly. I've seen people use Vex successfully for 0 day expiration trades as well, but for me, it's just a little bit too much to look at. And with Gex alone, like I've been pretty successful with 0 day expirations. So I don't really look at it that much for like day trading. I mainly just look at it as reference for swing trading. So Lulu is the one that I mentioned was a potentially good swing trade, and I'll go ahead and look it up real quick on here. Anybody that has Heatseeker Pro access, you should be able to use the bot to pull up historical information. So the way you do that is by typing in slash heatmap, put in the name of the ticker, and then if you want to pull up both of the Gamma and Venom maps like simultaneously, you don't need to input the type. Just go to date and time, and then put in the date as it prompts you in the tooltip above, okay? So I think it was 09, 15, 09. Let's do like 35. This is Eastern time, okay? So let's see what this says. All right. So Lulu at this point in the morning of Monday showed that 160 to 157.5 was the floor, and it was showing upside even on the same week column, all the way up to 165 to 170, okay? So my prediction was like, okay, 157.5 is probably the floor. Um, Even on the Gex chart, if you look at it, like you don't see nodes in the second column. Actually, let me use the annotation tool so you guys can see more clearly, okay? So you can see like this is the floor node for like the first week, and then it's clear that it's upside, right, in terms of the pull. Even if you look at the week after, like you've got this one right here, but you don't really have anything down here. So what that tells me is that the current week lows is 157.5 to like 160-ish. And even going into the week after, like there's no like heavy downside risk. So this, to my opinion, is at least good for like a 1 week out swing, okay? Now, as I was mentioning, let's go ahead and also give a look to the Vex signal here. And you have something similar here, okay? You got, let me actually just, fuck, this shit's in the way. All right, anyways, you've got a 157.5 Vex floor here. It goes all the way up here. The keynote is higher. And then look at the week after. It has a major node upside right here, okay? So bare minimum, what you have is a 157.5 floor, and you've got upside all the way to 175, right? All the way up to 175. That's a potential 15-point jump, right? A 15-point jump on a 150 or $160 ticker is a 10% move. Like that's actually not a bad move. So that's generally what I'm looking for swing trades. Like I want like a bigger than, 10% move at least, and that's usually how I determine like what I'm gonna take. Like the thing I like about this setup is that, first thing first, like you've got a floor on the 0 day. So like your downside risk is limited to $2.5 even if you entered at 160, but then your upside reward from there is 15 points. So that's like a what, 2.5, 15, 2.5. So it's almost a 7-to-1 risk to reward ratio, which I consider something like really, really good. Like you generally want at least a 3-to-1 risk to reward ratio, and as long as you have that, it's good. On top of that, like sure, this node is like not super huge, but like it gives me a little bit of confidence that, potentially if they get news, then it could go higher. And even going into like October 17th, like it just keeps on ramping up. So these are the stair stepping up into the right setups that I'm talking about. Like generally, you want like unidirectional setups like this, and that's what defines for me what is a good swing trade versus not. Okay. So hopefully that helps. If that is confusing to anybody, then go ahead and leave a comment in the chat, or you can unmute yourself and let me know why that's confusing. Okay. I think
Hey,
another
Glitch, you had a
interest.
question in the chat about why the next purple node down below 157 wouldn't be the floor for that day.
150. Hold on just a second. Let me see. I'm sorry. I'm just trying to get my chart set up. Okay, so what you're seeing here is why wouldn't 175.5 be the floor over here?
No, in the next chart, the Vex, I think.
Yeah,
In
so
the
on the
S&P
on
Vex.
the so the Vex is like 50, it's like negative 15 mil right here. That's actually half of the value of the largest absolute node that's at 165. So a lot of times like it might not touch this major bottom node because what I was mentioning is like it's a fight between a magnet. So if you've got a magnet at 170 or fuck, I don't see these numbers. If you've got a magnet at 165 right here, for example, that's like twice the size of the magnet at 157.5. A lot of times, like it might not even touch that lower node. Okay, because this upside pull is still double the strength of the one at 157.5.
Okay,
Does
thanks.
that make sense? Like it could touch it if this upside node was a little bit weaker and they almost had like equal pull or something. But quite honestly, like this node is not too far off from like spot price. So you have to look at all of these different like major and secondary nodes as like having pull on price.
Makes sense. Appreciate it.
Yep, no problem. Yeah, and I think even on the even if you look at the chart and you zoom out to like the monthly, let me just pull this up real quick for reference. So if you pull up the chart here on the monthly, generally like some of the strategies that I really like are like pivot flips, like breakout retests. And if you see right here, like it wicked below it, but eventually it reclaimed it. So, those are good swings to take. Like you want to play off the retests. Like even right here, like sure it did hunt down a little bit heavier, but it's defended it once, so you expect it to defend it a second time. Morali, Heatseeker recording from previous session. If you're talking about the 102 session that I ran in Owls, that one's on my YouTube channel already. I already uploaded it. K-Shaw, difference between Gex and Vex, I've already mentioned. Um, Yeah, JB Heatseeker does serve as the potential direction. My rule of thumb always is to just focus on like market structure and price action first. So look at support and resistance, look at liquidity levels and liquidity hunts, look at pivot flips, which are, resistance breaking to become support or support breaking to become resistance. Like you always have to look for confluence and like, I think until you get very, very comfortable with Heatseeker, like charting should still be your primary indicator. Like for me, I'm at a point where like I've built enough experience and trust with Heatseeker where Heatseeker becomes my primary, but I think for everybody else that's starting off right now, you should still fall back on your sword, which is just basic TA and charting. I don't listen to music when trading, and it's a pretty interesting like explanation as to why. Like, there's a couple of things I don't do anymore. I don't try to trade while I'm at the gym, and I don't listen to music when I'm trading. The reason I don't do that is because like there's certain types of music that just kind of get me hyped up and get me becoming a little bit more aggressive. Especially like when I'm at the gym, like I'm pretty pumped up and like I become a lot more optimistic than usual. So there's a couple of times where like I went to the gym and like I'm just pumped up and like I take a position and I'm like I get overconfident, right? Like I just get overconfident and like I end up breaking rules and I just do stupid stuff. So generally like when I'm at the gym and working out I just don't trade, and like I also don't listen to music unless it's like slow jams or something. Like usually when I trade I need something to slow me down. Like I don't need something to get me hyped up or aggressive because that results in a lot of the inner beasts to come out, which results in breaking rules. Like when I trade, like I try to be in a very zen state. Yeah, case studies would serve best instead of regurgitating questions. So, hopefully that Lulu example helped. Just to recap what I usually look for when I'm swing trading, I generally look for a stair stepping up into the right pattern. It should be very, very clear. It should be unidirectional. And what I mean by that is I don't want a map that has a stair step up into the right, but it also has a step down into the right because that's like not single directional, right? It's going in both directions. Like it's too uncertain for me. Like I want it to be as clear as day and night, where on the current week it is near a floor node, and then the weeks following you see the king nodes are moving up and to the right. Like that's generally an indication to me that it's a good bullish setup for a swing trade. Yeah, K-Shaw, like yes, there's divergence between QQQ and SPX, but like these tickers that trade 0 day expirations, like they can like shuffle and they can change incredibly like once the market opens. So I don't try to focus too much on what those charts look like right now. Like, a lot of people always ask me like, "Hey, what's your target for SPY for like next week?" And like I really don't care because nobody knows what the target for SPY is next week because whether anybody wants to believe it or not, dealers are actively adjusting their hedging and their exposure like every second. So if people are trying to, I mean, Like you could do like a general ballpark, and like if you're aggregating like all of the data, then you might be able to be like, yeah, like on this particular date or this particular month, this is what we're gonna see. But like I want pinpoint precision, and I usually just use like the newest and like rawest and freshest form of data to make my determinations. I guess the difference between me and other people is that like 95% of my profits are from like day trading and scalping. So I don't really care to look that far out anyways. Like it just gives me anxiety and stress trying to forecast and predict that far into the future when I know things can change. And like I just don't like drawdown. So even if I knew like the market is going up into October, like I don't like drawdown, so I'll still trade it a day at a time instead of, trading it like a week or a month at a time. Yeah, Crowd was a good setup on Heatseeker. It was a pretty good bounce. I think it was a 460 to 480 range before the night it gapped up, and then after it gapped up, it had the king node at 510. So they rolled it up, and then it closed. It hit up to like 507, so pretty damn close. How do I control my emotion and stay disciplined consistently? I fucked up enough times to realize that if I don't control my emotions and stay disciplined, then I'm not gonna make it. So when you have so much on the line and like when you want something so bad, like you stop making the same mistakes a million times. And to be completely honest, like I'm generally a pretty like optimistic person. So for me, it was very, very difficult for me to keep everything in check. But, you know, after blowing your account so many times, like you stop being stupid and then you just learn. Like a lot of people, like they have to learn through their own experience by having their own skin in the game. So, even if they don't listen to me and the rules I put out there, I don't blame them because I was the same way. Like I had to make, 3 to 4 years of my own mistakes, 3 to 4 years of burning my own hard-earned capital where if I had just listened to the books I read and listened to the people that were giving me feedback, I would have been much better off. But I think it's because I made the mistakes that I made and I learned lessons through my own scars and through my own pain that I was able to come up with a much more unique approach that other people wouldn't have gotten to. So, like, I really do consider myself in probably at the top, maybe 2 to 3% of traders in the world. And I think I was only able to achieve that because I followed my own path and my own journey. So if you really want to be like the absolute best, then like just fucking suck it up and lose a shit ton of money and learn through your own experiences. If you just care to be like top 5 to 10%, then just listen to what I'm saying and like don't break the rules that I tell you not to break. Like the more pain you feel, the more gain you'll eventually end up with as long as you don't give up. Like that's just my true belief. Yeah, we can look at SPX on Friday. I'll go ahead and do that. Let me just take a look real quick. Yeah, SPX actually had a really, really good example that I'll show you guys. This one is actually from John Wicks, who is on our success team. So John N over here, his name is John Wicks in our server. He is part of our success team. Like I actually have a success team for Skylit, which is directly in charge of ensuring that our users and members are successful. I select these people and I handpick them based upon their demonstration that they're actually able to absorb my teaching. So if you see them and they have the success team like holographic role, like they've earned it, and I only entrust them to do so because they've been able to prove that they listen to like my teachings, they've been able to implement it, and they trade almost a carbon copy of how I trade. So let me go ahead and show the case study that he has for us. This is SPX on Friday. If you look here at the map, you have a gatekeeper node right here. Sure, you have a small node right here, but it's very, very small. Like it's only 14 mil, so it's less than half of the 6630. And then you've got a massive node up here at 6650, okay? So if you look on Friday, what you could have done is you wait for this pullback, right? I'm talking about, so you've got like a little gap right here. You wait for this pullback, you keep your, level at like 6630. But remember what I said, like you always have to give these nodes like a plus minus 5 point worth of variance. So bare minimum, you should have been able to kind of front run here a little bit, the 6630 with a limit buy and take like at least the 50% position. If it dipped like 5 points below it even more, then you could have scaled into full size. But I don't think anybody that is proficient with Heatseeker should have missed this trade. Like it was literally a textbook trade. Um, it dipped down here, bounced right here. If it bounces right here, look at the next node up. 6650 is like almost two-thirds larger. It's like significantly larger than 6630. It's literally king node. So you ride it up to 6650, and look how fucking fast that shit happened. Like there was barely any red candles on this move. So, you would have absolutely printed. The way you would play it is that you take profits as it approaches 6650. And if you did, you were happy because otherwise you would have been caught up in this chop and then you would have just been getting theta fucked. But guess what happens afterwards? It The first attempt fails, the second attempt fakes out, fails again, the third attempt fails again, the fourth time it breaks through. And remember, what I mentioned is every time a level gets tested, it gets weaker and weaker. So the fourth time it broke through, you would expect this one to eventually backtest it, hit it as support, and what you would also notice on the QQQ and the SPY map is that QQQ had nodes rolling up to 600, and SPY had nodes rolling up to like 593 or 594 or something like that. And even SPX had nodes rolling up to 6660. So you would have played the backtest on here, and this would have been your second entry for another write-up right here. Okay? So hopefully that makes sense to everybody. It's a pretty simple one. Um, if you are not able to make sense of it, then I highly suggest you go over it because these are literal money plays. So Casanova, hopefully that helped. If it didn't, leave a comment on anything we can clarify, okay? Yeah, we can go over Microsoft too. Dax, I'm assuming what you're saying is you want to go over Microsoft, right?
Yeah, ideally.
All right, let's go ahead and do that then. So, no, I don't care about type. I care about date and time. We could do 09. I think this was the timestamp right here. All right. So the thing that we saw on Microsoft is that, so like Microsoft was like another setup that I was suggesting that people take swing trades on. The reason I was saying that is because it was at a major floor right here. It's not going to break below 510, okay? Like if anything, it'll bounce from 510 and go up to like 512.5 or a little bit higher. But the great thing here is that you've got this stair stepping up into the right pattern, right? If it's doing that for like the next 2 weeks with like not much downside right here, like that's a fucking incredible setup, right? Like you've got a straight shot up. Bare minimum, as it bounces off of 510, like you should be taking calls for a swing, right? You can also do a day trade and expect to get like, 2.5 to 5 points out of it, okay? Now let's go ahead and see what happened next. Hold on, did I just stop my screen share? I think I did. All right. Okay. And even on the Vantage chart, like Microsoft is just like, I mean, this is fucking sick. Like it goes up, and then maybe afterwards, like it might dip down. So we don't really care about that, right? Though, because as long as we get out as it's approaching these targets, like we're fine. After that, so 1409 was the timestamp that I pulled from the chart. If you go to Microsoft here, 1409 equates to this point right here. I don't remember why I have that blue line drawn right there. Let me just zoom out real quick. Okay, yeah. So this is another reason why I just tell people to like line up Heatseeker with price action. You've got this major like level right here. 1 second. So you've got like a level right here. It became a pivot flip and it rejected, and like it's just a very significant level, right? So after a break above it, like you can expect it to retest. And given that this aligns with the 510 floor on Microsoft for 0 day expiration, like you could try to ride it up like 2 points to like 512.5, but like you would have still gotten lucky and hit this fucking fat candle right there. Regardless, like even if you didn't take 0 day expirations, like you would have been able to take a swing trade, and even swing trades based off of this candle are up like 100 to 200%. So Microsoft was a very, very clean like heat seeker trade, I would say. Yeah, JB, I'm like going through like three case studies already, so hopefully they're making sense to you and you're finding value in them. I can go over CrowdStrike as well. One second. Crowd was like another like really, really fucking good setup, like an incredible setup. Let me just pull it up real quick. Um, let's see, was it September 17th? Um, let's just do like some random fucking afternoon time and let's see what it showed for crowd. All right. Yeah, so crowd, so it was weekly off the gamma chart. I mean, fucking, is this real? Like, am I seeing this correctly? Yeah. So it had a 440 node right. Like this shit was fucking incredible. Like it had a 440 floor. And remember what I say is like always play the deflections, okay? Like sure there is a 420 like, 500, but like I ignore the ones that are three digits. You always want to trade the ones that are four digits or higher. Like bare minimum, you buy off 440. You've got a node up here to 460, potentially up to 510 if it clears that. And let's see what happened. This was at 12. This is the 17th. All right, the 17th. Uh, yep. So 17th, like it was like literally like right at the close. I think the 440 level. Yep. Yep. So yeah, I mean it undercut like a little bit, like 6 points down, but shit fucking exploded. Like you would buy anywhere like around the 440. Let's go ahead and see what it looked like on the intraday. Yep. This one, like as soon as it crossed there, never looked back and it's just gone. Like it literally zero risk. Broke and then it gapped up and then I think 510 was the node, right? So yeah, we tapped 507 and I bet you if we looked at the map, then 510 was king, but I'm pretty sure it had some downside nodes still present, so it didn't tap the ultimate like high node. But like this is the reason I tell people like just look for really, really good asymmetric risk to reward setups. Even if they don't hit the final target node, like you should still be up fucking massive. Like CrowdStrike went like freaking 3,000 to 5,000% off of that 440 break. So that was an incredible like asymmetric risk to reward setup. Like I would take that 10 out of 10 times, but I didn't because I've been focusing on just onboarding people and getting them familiar with the maps. Yeah, Hood was an easy one. That one showed like 125 king node like the entire week. Like I did a case study with another member on Hood. Like I don't need to go over that one because no matter how many times you look at Hood, like you will fucking notice like it was just in our face. Like it was so in our face that I even doubted it. Like I even doubted my own like Heatseeker and didn't play it. But like 125 was stacked on the Gex and the Vex all week. Like nothing changed. Remember when I say the king node is stacked across Gex and Vex, like you don't ignore that. Like that's going to be very, very important. Again, what I mentioned is like use the Heatseeker. Even earlier in the week, 125 was the king node. So what you do is you draw the support on the particular range. You wait for a liquidity hunt, which happened right here. You can enter on this one, and then it fucking blasted off all week. Gone. I think Hims had a 55 node and then it had a 60 node. So let's see. Yep, 55 broke through. Let's see if it hit 60. Nope, didn't hit 60, but it got pretty damn close. Like literally 60 points away. Damn, JB so demanding, man. What's your name in Discord, buddy? Yeah, let's go ahead and take a look at Roblox real quick. 1 second. Right. Yeah, Roblox. All right. Yeah, so Roblox looks like it has a little bit of upside pull towards 140 and 146. I think Roblox is like near all-time highs. Like I don't really like trading tickers that are all-time highs, but let's see. Yeah, but like looks like it's stacked at 146. It's stacked at 140 as well. Vex has 126 down low, which also coincides with the Gex node at 126. So there is a little bit of like a tiny bit of pull down here, but like I would have to look at the chart and see what Roblox is looking like. Yeah, Roblox is looking interesting. It was like what 146 was the node, right? Let's zoom out to the hourly. Yeah, this one, yeah, I think if it holds right here, it looks pretty good for a potential reversal to the upside. Well, you would just really want it to hold right here though. Otherwise, like if the thing is if it drops down here, you want to keep an eye on that 126 node that we saw because that one can actually start growing in strength and become an equal pull. Then what you're gonna end up with is a chop in between the two zones. But it looks okay right now. I mean, it topped all-time highs like pretty recently. So from a price action standpoint, like it doesn't really like excite me because it's at a bearish golden fib right now. So it could be a potential rejection zone just from PA and like market structure standpoint. But you could try. Like it's a breakout and it's a retest. So there's a probability it could just bounce from here. Just PA does not quite align with the maps. So in this scenario, like I might not even take it, to be honest. How far is too far from the king node to be unreliable? Dane, I think that rule applies to indexes and ETFs a little bit more than single tickers and individual tickers. If you look at the like SPY, SPX, QQQ nodes for this week, like I think QQQ had a node like all the way down at like 575 or some shit like earlier in the week. And it's just very obvious that it's a hedge node because even on Thursday that was there and it's a 3% drop from where we're currently at. And you know that Bank of Japan was making a rate cut decision on Thursday evening America's time. So they were just hedged for a potential Japan carry trade V2. Like sometimes you just have to use a little bit of common logic to understand like whether something is a hedge node or not. By just understanding like what are the world events, what are economic data that's happening, and potentially OpEx as well. Is there a minimum number of the node that I'm considering reliable? Minimum like 4 digits. Minimum 4 digits is what I mentioned. Like 3 digits, and I'm just a little bit iffy. Like it could still pull because it's all about like relative strength. But if it's less than 4 digits, like it probably just doesn't have enough liquidity, or it could be a new ticker that was added that just hasn't been seeded that long. The 6600 node was getting stronger when it got to 6630. We still follow the play to the king node at 6650 regardless of how much strength the lower node is gaining. Um, no, I mean I showed you the map on the recap just now. Like the king node was 6650, and even when it approached 6630, 6650 was still the king node. So yeah, you buy the dip. No, the TradingView integration has nothing to do with Heatseeker. That's just a completely different TradingView algorithm that I developed and used for reversal trading, and it's pretty dangerous if you don't know how to use it. So I actually think it's unnecessary for people to become successful. Yeah, 330 and end of day SPX plays. Like if you're playing. Like, I would just suggest lottos, and the only reason I do is because 330 is a Robinhood liquidation time, and there's like just massive amounts of shuffling that are happening there, and MOC is the same. It's just, yeah, it's just a huge like shuffling that's happening. But on Friday, it was very, very obvious that nodes were rolling up. Like SPY rolled up from 653 to 654. SPX rolled up, and then QQQ, the 600 was accumulating very, very fast before any of that pump happened. Like from 598, like you started to see them accumulate to 600, and then we tapped it perfectly into close and rejected. So I think the reason I mentioned to always keep an eye on QQQ as well is because it has more than half weighting on the S&P 500. So if QQQ is fucking strong and if it wants to rip, then it's gonna take SPY and SPX with it. Um, I don't fucking know. Microsoft considered an A plus or S level setup. Let's call it an S level setup because calls went 3000% plus at the end of the day. I think app was a fucking really, really good setup. Like if anybody missed app, then you got to do more fucking studying. Like sometimes it upsets me when I see like nobody taking these kinds of setups because app was just incredible, man. Hold on, let me just pull it up real quick. Yeah, I think app was like another one where people should have been in calls, like bare minimum, they should have been in like swing call or call swings. All right, let's see. Yeah, so app had a king node at 620 right here. And then if you look here, like sure there's like some small maybe it wasn't like as good as like Microsoft. There's some small nodes here, but then on the Vex for the following weeks, like you've got a big amount of accumulation up here. Well, you've got a lot more accumulation waiting up here than down here, right? Like that's undeniable. Like at least three times the amount. So you go out to the GEX, which is their 0 day expiration. Remember what I was saying about the purple nodes is that since they're volatile, like there's a probability that it undercuts by at least 5 points, like plus minus 5 points. In this scenario, even if it did undercut, like you would have caught a bounce at like 615 anyways, right? Because there's another floor down there. So you could have loaded it for a swing. Let's go ahead and see what the chart looked like at that particular time. So this is what happened to app. I think earlier when I pulled it 1140 right here. So you draw a line at 620, which is the floor, and then 615 was the next floor down. So generally, like what I was telling people is, what I do is I buy with limit bias. So as app is approaching the 620 level, like what I would actually do is I would set a limit buy and I would lowball the bid. So if it goes down for liquidity, like I just get a fucking incredible sell from a panic seller, like a stupid panic selling retail. Like I'll literally take contracts off their hands and it'll fucking bounce and rip, and immediately I'll be up like 30 to 40% on the trade. So you take that one expecting a bounce, and you can even take a swing because like the following column has a lot of accumulation upside. And as such, similar to the Microsoft, like similar pattern, it just rips because the next week nodes start hitting as the 0 day expiration nodes fall off. So like that's one thing that's important about like OpEx is like OpEx are days where there's so much like exposure, like dealer exposure that's actually washing off that like towards the end of the day in the close, what you can expect is that the nodes from the next column are going to start kicking in because the ones from the week of, which is Friday, are going to wash off like really fast in the close. So that's what you're seeing with app. That's what you saw with Microsoft. It's probably what you saw with SPX as well. Like I wouldn't be surprised if we looked at SPX and for the column after, like we saw upside accumulation and exposure. Yeah, Duolingo, we missed the bottom on that one. Like I had my eyes on that one and I just ignored it because Apple launched news that they're pretty much launching a competing feature and product, so I didn't take that one. Yeah, CVNA is like gone, man. Like fucking CVNA, I think last week like it fucking ripped off of like a perfect setup, but I mean CVNA is another one though. It's like it's all-time highs. Like I just don't really like chasing all-time highs. Oh, there's two JBs. Yeah, they're fucking all these JBs, man. They're asking for so much shit. I'm gonna have to charge this guy double. Yeah, let's go ahead and see. I'll go over some of the stuff that people are looking at real quick. Let me just scroll back just enough to make sure I'm not forgetting, but yeah, Palo Alto Networks. Yeah, I don't really see what anybody is seeing on Palo Alto Networks. Like this one looks like it wants 200. So, I mean, I guess my question is like, are you looking to short it down here or are you looking to play the bounce from here? Because if you're shorting it, I mean, you've got like 7.5 points of potential downside, but if it wanted to like go up, what is your upside risk, right? Like it's almost a asymmetric. It's not asymmetric enough. This is symmetric risk to reward. So like it's right at the midpoint of like the king clusters here and then the lower one. So I mean maybe if it went up a little bit and then this node keeps on growing stronger, then you could do a potential short on it. That would be like the only way I can imagine playing this one. It doesn't really look like a good map overall though. So I don't know what your intent was behind Palo Alto Networks, but um, yeah, I don't really see a play there. Yeah, let me see. Duolingo. Yeah, Duolingo looks okay. Like this one, Duolingo is like very light on data for me. I think I added it pretty recently. Um, yeah, Duolingo is like one of the more recent ones I added, so it just doesn't have as much data seeded on it yet. I'm implementing a feature where tickers that haven't been seeded for more than a month are gonna have like a leaf or some kind of like plant icon on it. That way you'll know it's a fresh one that I added and it's still like seeding and collecting data. Like whenever I add a new ticker, like it needs at least 3 to 4 weeks of like, seeding and reinforcement learning to make sure that we've got like a pretty good inference layer supporting it. Yeah, coin. Yeah, coin looks all right. I think crypto in general like looks pretty decent. Yeah, coin looks like it wants 355. It's got some small nodes down here that you might want to be careful for. I think MicroStrategy showed like a pretty decent setup. Yeah, MicroStrategy is one that I liked a little bit better. So I like on MicroStrategy last week, 340 was like a major node that it broke out from. So as it retested 340 into the close, that's where I actually bought the dip because if I looked on the Vex, it showed that it was start stepping up into the right. So, like, I think, it might tap 355, maybe 360 this week. So, as it approaches 355, like, I'll probably cut my calls. But yeah, I'm already up 20% on that dip buy, so it's pretty free for me. Mario's a separate chat channel to alert what stocks are moving during the day. Very hard to find and read in one channel. Mario's like every single person that's paying for Heatseeker is doing themselves a disservice if they're not learning to use this tool and looking for their own trades. Like you don't like if you just want to trade off of alerts and stuff, Owls has a ton of great alerters. Like Heatseeker is built and developed, and I teach it in a way where it's brain dead simple to use. So if you're not learning to use the tool and if you're not making it part of your own strategy and your unique approach, you're not going to get the best out of it. Like there's so many people that use Heatseeker today that are literally outperforming me at this point. And the only reason they're able to do that is because they're making it part of their own toolkit. They're not trying to copy the same exact way I use it. So, there's a layer of interpretation to it where like as long as you know the concepts and like how to use it, you can apply it to your own strategy and like you could even get better results than me. So, you know, like we always post in the chat, like in the Owls chat and in the Asgard chat, like I post things that look like good setups and I post like, node rollups and like, changes that I'm seeing. But ultimately, like your goal should still be to like study and learn it on your own, do a lot of back testing by using the Heatseeker bot and just like making it a part of your own strategy. Like you should be the one posting what's going to move. Yeah, I think SMCI looked pretty decent. It looks all right. It's like pretty close to the keynote already though. Like it's got a nasty cluster right here. It's got to go through here, it's got to go through here, and then we'll be able to potentially see this. But let me see what the Vex says. Yeah, so the Vex is like it's kind of like split. Like on the Gex, like you're seeing completely opposite of the Vex. So in these scenarios, like it's a hard call. Like if you get lucky, like you might see 53 on the week. But like I just don't like that there's a gatekeeper at 47, which is just a point above where it's currently at. I think BA was like one that I saw that was interesting. Um, and particularly it was interesting because I saw these nodes over here. So you see like a cluster of yellow ones right there. Um, and because of that, what I was saying is if we get a dip down to 210, then you fucking buy that dip. and then you ride that bitch up into October 17th. I guess the only thing is October 17th is OpEx, so maybe maybe it doesn't hit that, but regardless, I think a dip buy off of 210 looks pretty decent for BA. Yeah, Hood, I think it might get stuck at 127 here. There's also strong pull at 122, so yeah, I'm not really too sure how I feel about this one. Like maybe if it dipped down to 122 and these ones are still here and keeps on growing, like I'd be interested in doing a dip buy. The only reason I'd be interested in doing a dip buy is because if you look at the VEX, like it's got pretty strong concentration up here. It's got pretty strong concentration up here at 140 and 135. So we'll see. I mean, it's also got a fucking massive 34 million here at 112, so that doesn't really instill too much confidence. But yeah, like just remember, like the one feedback I'll tell everybody, and I fucking tell people this all the time, is don't play shit that already moved the fucking fat amount. Like Hood was such a great trade and setup last week. Like just look for the next good trade. Like I think the biggest like trap that a lot of people fall into is like they're like, "Oh shit, Tesla fucking ripped from 294 all the way to like 340. I missed it. I'm gonna buy the pullback on it." But like you're just gonna get fucked because like you missed the major move and like you're going for scraps now. Like look for a move that has a lot of meat on the bone still that hasn't had a crazy move that captures the attention of every fucking retail trader out there. Like this is a psychological block that you have to get over. Like if you can't resist FOMO, like you're not gonna make it. And like a very, very common trait that I see across a lot of trade, like even CoreWeave, like that shit ran so hard from 85 all the way up to like 140. And then because they missed that run, they want to buy the pullback. I kept on telling people it's gonna fucking pull back to 115, but then like people chased it still. And like even fucking people with like 100K followers on Twitter are like chasing CoreWeave. And like if they just listened to me and buy the dip at 115, they would have made a shit ton of money. But like it's just people just can't resist the temptation of the FOMO. So, like the way I trade is if I traded something and I made a lot of money on it last week, I just let it go. Like I don't even really look at it the next week because the fact that I made a lot of money on it last week indicates that the fresh A plus setup is no longer an A plus setup. Like I just don't look back at it. Like I give it a break, I let it reset, I let it consolidate and chop and whip people up. And then when people give up on it and start like looking at other shit, like that's when I'll go look at it again. Like you want to think inverse of like the rest of the retail audience and like you just have to like blaze your own unique path and trail and like go look for fresh setups and fresh like plays that people don't have eyes on. Like those are the ones that hit the hardest because that means that the implied volatility is going to be low on those tickers because nobody else is looking at it. Tesla after a major pump like that, CoreWeave after a major pump like that, the implied volatility is juiced. So naturally, you're paying a premium on those options that you're buying. Like generally, like the rule of thumb is if IV is high, then you should be selling and you should be slanging those contracts. You shouldn't be buying them. Okay? So like later I'll go ahead and add like an IV skew feature to Skylit eventually, like when I have the cycles to get around to it. But like you listening to all the noise and like listening to all the FOMO is trapping you into buying high IV contracts, which is not good. Like you want to buy low IV contracts that people are not looking at yet. Like Microsoft is a great example. Like people fucking like they all give up on Microsoft. They're like, this is shit. And then it fucking mega ripped off at 510. Like when a setup looks good, and when people are tired of waiting on it and they're giving up, like that's how you know it's a good setup. But like when everybody's talking about it and they're all super hyped about it, like just be very like skeptic of that. All right, let's take a look at Wing. Yeah, Wing has a node up at 380. Yes, like relative strength wise, like 380 is great. Like just don't go too heavy on it because Wing is a very, very low liquidity setup and ticker. So like it might be worth some lottos, but I just don't know if this has enough data behind it to be reliable. Yeah, ISRG is another one. There's just not enough data. Like these are all 3 digits, and I say trade 4 digits or above. So like, yeah, it might work. I mean, going into October, like it fucking shoots up like crazy on the VEX, but Like the Gex is like very low on data. So it's just a very low liquidity ticker. So you could take it, but like just take it as like a speculative trade and like a lotto. I just wouldn't go like a normal size on it. All right, cool. Yeah, if you got in on app off of the bounce based off of Heatseeker, like you should probably be up at least like 50 to 100% already. So congrats. Yeah, JB, like you say it's hard to keep track of all these tickers, but you know, I spend every night flipping through all 300 of these and it takes like 10 minutes these days. Like it's much easier than going through 300 tickers on TradingView and drawing support and resistance on all of them. So, you know, as tough as it may sound, like it's actually pretty easy. Like you just got to put in the time, man. Like trading is very difficult. It's a negative sum game, meaning like it's like people like if you're winning, then somebody's losing. So the winners are going to be the people that put in the effort and put in the time to actually try to be successful. Heatseeker speeds it up tremendously, but it also gives you like predictive insights and forecasts into where price action can eventually play out. So like that's what you should be grateful for. It doesn't mean that it's going to trim down the amount of time you need to spend from like, you know, 1 hour to a minute. You know, if you're just going to be I don't know. Like I guess you know I've always put in a lot of time and discipline. So when people don't want to put in the work, like I just kind of like rub it like it just rubs me the wrong way. Like this shit makes it brain dead simple and easy to see like what direction a stock is going to trade. So like literally just like spend like 10 to 15 minutes and literally just scroll through stuff and like take notes. You know, just this is literally what I do at nighttime. Like I just scroll through and I'm like, all right, like what's a good setup? And then if you want to switch between the Gex and the Vex, like you did just do Command G or Command V and you're good. All right. QCOM. Yeah, QCOM looks interesting. 175 potential. Yeah, QCOM probably tops 175 this week, I think. Yeah, the chart itself doesn't really look that great. It literally just ripped from like 143 all the way to 170. So, yeah, not a big fan of it, but yeah, you could try it. 175 looks like a valid target. Yeah, so like as I was mentioning, like even with Heatseeker, like generally what I don't like to do is like I just don't like to chase things. QCOM, like I like to buy things into a pullback, and QCOM has literally ripped nonstop. It ripped like 18% already. So like sure it can hit 175, but like where's your risk, right? It's like the most recent like breakout level is right around it's like right around this level right here. So yeah, it just doesn't quite line up. It's like usually I buy into double bottoms or I buy into breakout retests or I buy into golden zone fib retracements. But this, from a price action and market structure standpoint, hits none of those. So yes, while it looks good on Heatseeker, like from a PA standpoint, like it just doesn't support a bullish thesis for me. I mean, I wouldn't be surprised if it still hit 175, but still, like I just don't see, like it's just not worth it for me. Yeah, Duolingo dumped because of the Apple news, and then it should have bottomed. Like Duolingo was a very similar setup to Lulu, where like everybody thought it was absolutely shitty, and then it just fucking bounced really hard. But that was also on the heat map. Like I was actually planning to load Duolingo on my dub port, but I forgot all of it. Yeah, I think Dane, like I usually find so there's no like proper answer for that because it's all conditional. One thing I would say is Monday is still fine to trade from, but the earlier it is in the week, the better of a risk to reward setup I'm looking for. Because even if there is an upside target, you have to remember that these are end of week targets. You don't know how long it's going to chop around. You don't know where it's going to pull back to before it actually hits the target. So technically, like Wednesday, Thursday, Fridays are like my favorite days to trade because like the magnets just become stronger and like charm kicks in. So like naturally the price gravitation is just a lot cleaner. That doesn't deter me from taking a trade on Monday though. Like if I see a really, really good risk to reward setup on a Monday or Tuesday, I'll still take it. I think my only word of advice and caution is to be more conservative in terms of the risk to reward setups you see. Like if you see a 5 point upside move on like a $150 ticker on Monday, like you don't have enough upside room to be able to make it, right? Like data is gonna kick your ass, and then sure, it might still hit your target at the end of the week, but like your contracts are fucking toast. So I think a lot of people fall into that trap. They're like, yeah, this shit looks clear as day and night that it's gonna pump 5 points, and then they're like, wait, why the fuck is it not pumping? And then their contracts are down 80%, and then on fucking Thursday and Friday it pumps, and then they make money. Like that's what happened with I don't remember which one it happened with, but fuck, I don't remember. Actually, Microsoft, yeah, Microsoft fucked me this week because in the beginning of the week, like it looked really good, and then it kept on chopping and chopping and chopping, and then the 500 started to accumulate, and we ended up at that fucking nasty 530 to 500 chop, which kept it at 515 the whole time. And then like I gave up on it, and then I forgot about it, and then fucking it ripped on Friday off of 510. So yeah, that was like my one losing trade out of the entire week. Like that one fucking destroyed me. Luckily, it was a lotto, so I only lost like a band on it, but it's still annoying. Can join Dub Invest Glitchy. Yeah, you can. Yeah, Hung, like you may be thinking right, but like just let crowd go, man. Like it fucking ripped last week so hard. Like go look for the next setups. Like that was the whole point that I made earlier. Like if there's something that just fucking ripped, like just let it go. Like don't go for sloppy seconds or like sloppy thirds. Like go for fresh meat, you know? Yeah, BMNR wait, you said BMNR can probably rip once it breaks 70? BMNR is not even at 70, Morale. It's at 61.29 right now. And it's gonna get stuck at 65. But yeah, this BMNR was a pretty recent add too, so I don't have that much data behind it. I think a lot of people are in it though, so like I'm avoiding it. I don't like to play stuff that a lot of people are in. I'm a sleeper, so I generally avoid the crowd and just do my own thing. What's the next big planned update for Skylit? I'm not entirely sure. Let me see. Yeah, I'll probably say like the big one would be Surface High. Yeah, maybe the multi-watch list and favorites is going to be the next big feature. Like a lot of people said that they don't want to go through like every single one, so we're adding some functionality for people to be able to create multiple watch lists and favorites and alphabetize their lists. Let's just say that's going to be the next big feature. Yeah, that's actively being worked on right now. I have it in staging. I just need to test it and push it to prod if people can stop asking me questions. Yeah, master MicroStrategy was already covered, man. We loaded it off of 340 last week because last week 340 was the floor and we're targeting 355. But if you didn't get in at 350, 340, like just let it go. Like you don't chase it. Yeah, ASTS, I don't really see anything right now, but this one is showing last week's map for some reason. We'll have to see what it looks like when it opens up on Monday. That's a caching bug. Do I look through the tickers every night? I don't really do it religiously, but I mainly trade SP. I mean, I usually trade SPX. Like 90% of my profits are from just trading SPX, so I don't have to go through like all of the tickers. I literally just wake up in the morning and I look at the map for like the first 15 to 30 minutes and then I start trading. Like I don't really have time to do much prep work because I'm just doing a lot of development right now. Yeah, MBIS looks okay. It's a little bit unclear for me, and the data is pretty thin. No, the Mario Kart, when you hit the spots that make you speed up, no, it doesn't really speed things up. Like you just experience like liquidity hunts and stuff around that level. But those are still reversal levels. Yeah, Netflix was a good short last week, and then I think off like near 1200, like you could have caught the bounce, and it looks pretty decent to the upside right now. But that's a fucking lot of upside. What the hell? Yeah, Netflix looks interesting. I'd be interested to see what happens with that one this week. Looks like a pretty good setup. It looks almost too good to be true. Not everybody's gonna be trading Netflix next week. I'll be sure to stay out of that one. Yeah, TTD. Yeah, TTD looks okay. Um, this is one where if it dipped down to 42.5, I'd probably take it for a potential long swing, given that no, well, Vex doesn't really quite support it for the next week. Yeah, this one's a wash for me. I don't know how I feel about this one. Morale, you're talking about BMNR breaking 70, bro. It's at like 62 right now. So what you're saying is you're gonna wait till it hits 70 and then you're gonna trade the breakout? If that's what you're gonna do, then man, you gotta revisit your trading strategy, man. Yeah, Josh, like it depends on your risk tolerance and like what your style of trading is. Like you could play a call spread to avoid the data burn, yes. I generally don't like to play like as much as I suggest it, like personally, I don't play spreads often because I'm primarily a day trader. So for me, being able to get out quick is like really important, and spreads just don't have as good of a liquidity than uncovered calls and puts do. No, I didn't make a Heatseeker plugin for TradingView. TradingView has limitations with regards to how often you can keep things up to date, so it just doesn't work for me. Yeah, we don't have a dedicated UX UI person. We're doing it all, or I'm doing it all. I did recently hire a product designer, but that person doesn't know how to trade options, so I'm teaching them how to trade options so that they can wear the hat of an actual user as they're designing and developing new products and new features. It just takes some time. Options takes a very, very long time to teach somebody. Yeah, SMCI, I already mentioned this one. You can go through the recording, but looks okay. It just has a lot of gatekeepers at 47, 48, and then it could hit 53 if it could break through both of those. Yeah, AFCO looks pretty interesting. I mean, it's got a pretty strong downside pull here at 320, so I don't feel too good about buying the dip here. Um, yeah, even on the VEX, 320 is pretty big, so yeah, we'll see. Let's look at what chips are looking like though. Yeah, chips. Okay, so this is also showing 919 still. Yeah, this is a bug. I need to get this fixed. One second. Yeah, some got carried over to the next week already and some didn't. So this is a caching bug. One second. Dane, what do I recommend using as a confluence tool? You can use options flow and you can use charts. Just like learn to chart, just draw horizontal lines on your charts and like pivot flips, and that's all you need. I haven't used an actual chart indicator in like 4 years probably. I don't really like Bookmap. I think Bookmap is level 2 in like price laddering, and there's just too much spoofing that occurs on it now. So I don't think like level 2 has been as effective as it was when people were first doing tape reading. Like when tape reading was like the OG method of doing it, which was like literally reading the raw tape. It was effective because it was still very, very hard to do. But tools came out like Bookmap that made it like just like non-trivial. So you started to get like a lot of spoofing on the L2. Like L2 is like really easy to spoof. Like even I could spoof the L2. So I don't really like it, and I think it's useless now. Josh, yeah, I do debit spreads. So like MicroStrategy is one that I did debit spreads. Like Meta is one that I did debit spreads on. Generally, the decision for me to play debit spreads versus not is if I'm trading a ticker with like very high premiums or IV, and I just want to bring my cost basis down without stressing about it. So MicroStrategy and like Meta are like very, very good for spreads. Yeah. So Anthony, back to your question, Bookmap, there's no correlation to my product. I don't think there's any tool out there in the world that has correlation to my product. Like a lot of people think that I'm just repackaging like gamma exposure and Vena exposure and charging 3 times the amount for it that other tools do. But in reality, like I don't even use the vanilla equation and formula for gamma exposure and Vena exposure. I actually have my own very proprietary and unique inference layer to determine exposure for dealers, and you cannot find that like anywhere on the web. Like I kind of developed it over time by accident, and it just turned out to work a lot better than what ChatGPT says dealer exposure is calculated by. So, yeah, I call it Gex and Vex because like I can't think of other words for it. Like I might have to like change the term or like rebrand it, but yeah, it's yeah, there's no other tool out there that compares that's showing similar results. Heatseeker for crypto in the future, like maybe, yeah, maybe. Yeah, I do use sector ETFs. Like I always tell people, like if they're gonna trade an individual ticker, then pull up the ETF for it as well. And like we pretty much have all of them. Like I think we've got like yeah, you've got SMH, you've got X, yeah, you've got all of the X like XLI, XLU, XLP. Like these are all the sectors. I think I've got every single one. But look at the fucking VIX. Like I don't know what's going on with the VIX, but like this shit, like if VIX hits 15, like you need to take some VIX calls for December. Like I think VIX is a no-brainer buy at 15 this week. Like if it dips down to 15, like I'm loading hedges no matter what going into December. And I'll probably do like 50 or like I might do like 45 calls or something like that for VIX for December. Because like I see some massive hedges up to this level, and like that's like a little concerning. Like these levels. And 15 is like a pretty good floor for this week. I don't yeah, I just do a naked call for VIX. It's like so cheap, dude. Like VIX calls are so cheap right now. Like Josh, you like I'm also all right. All right, here's a couple of things. Um, Instead of asking what why, like don't ask me if I should do X or Y. Like learn the concepts and learn the reasons why people do certain things and come up with your own like conclusion and decision making process. Like I can't preach this enough. Like if you try to trade exactly like me, you're probably not going to get good results. Like you still need to have like an element of like uniqueness to your trading style in order to be successful. Like everybody has like a crazy different risk tolerance. Everybody has a different personality of like how they trade. So try to learn and understand why certain things are advantageous, and you need to make the determination if you're going to play a call debit spread or if you're going to play an uncovered call, okay? The thing about debit call spreads is they're great because it brings down your cost basis, especially for tickers that have high implied volatility or have higher than usual premiums. That way, if you get chop or if you get pullbacks, you've got the short leg that's collecting premium for you, while your long leg is still holding like a decent amount of intrinsic value, okay? Like that's the whole reason you take a call debit spread. Like if people are asking me like would I take a call debit spread or would I take an uncovered call, like I really don't have an answer because like I it just depends on how I feel and like how I foresee things to play out. Like if I think a move is just gonna play out quick, like I'll just take an uncovered call. But if it's an expensive ticker and I'm like, yeah, this one might pull back a little bit before it hits the target, or hey, yeah, this might chop around before it hits the target, then I'll go ahead and play a call debit spread on it. For something like VIX, where I see there's, a node up at 55 and then I see a node all the way up at 100. Like if I was taking a call debit spread on the VIX and taking like a 45 and 50, like that would be very, very retarded and I would be very, very pissed if it actually did hit 100 because my gains would be capped at like 500 bucks when you could be making like fucking 6,000 bucks on it, right? So the answer is for VIX calls, like no, you don't do spreads. Like you want the maximum upside on it, and like even 45 calls for December are like, I don't think they're crazy expensive. Like it can't be that expensive. Like it's at 15 right now. So VIX would have to go up by 200% for 40s to be in the money. But like I'm telling you to take it as a hedge because like it seems like there's other people that are taking VIX calls as a hedge right now into December. Like you don't know what's gonna happen in the next 3 months. So yeah, like if I'm just being like I like to be as blunt as possible, and like the only reason I'm as blunt as possible is because oftentimes that's the only way people like just really get it. Like I truly want people to be successful, like learn the concepts behind things, like put your own interpretation on it based upon what you learn. Because even I don't know anything. And like sometimes like somebody else might come up with a better strategy than I have, and like I want to be able to learn from you too, right? So, like, just learn like what the pros and cons of different things are, and care less about like what I would actually do, and you'll be better off. Like, that's the right way to become a really, really good trader. A reason why I trade SPX instead of NDX. I still trade NDX, but the reason I don't trade it as often is because the liquidity for NDX is like very, very bad. Like NDX has very low liquidity, so the bid and ask spread is sometimes like fucking like 14 to it could be like $1,400 to like $1,800. That's literally your bid and ask spread, which is a $400 spread, which is fucking massive. If you get a bad fill on that, like you're shafted. Like I've been in like a pretty deep NDX position once. So it was like a 50K position, and like the contract actually went in the money, and I couldn't sell all of it at once because nobody was willing to fill it because there's just not enough liquidity out there for it. So like I got fucked on it. Like I think if you're a noob, you should not try trading NDX. Like NDX should be left for pros, and it's really scary. Especially at all-time highs, like NDX is very difficult because you don't get like crazy 3% pump days anymore. Like NDX is really beneficial where you have a dip and rip day where you end up with like a 2% leg or a 3% leg, then one contract can literally go like 20,000 to 50,000% in profit. Like I've done it before, so I understand the appeal, but that rarely happens at all-time highs. Like later, if we get a market reset or if you can catch NDX puts on a day where the market finally decides to like crash or correct, then like you could fucking hit a massive banger, but it's like once in a blue moon. Like you're better off just trading SPX and QQQ. Will the chart that you're looking at is the VIX chart all the way up at 100. So this is signaling that people are worried that there might be a major pullback into December. And the reason I said load at 15 is because VIX has a pretty major put floor at 15 for this week. Yeah, so yeah, debit spreads are good to avoid theta decay. I think the other side of the coin that you have to keep into consideration is that debit, like just with spreads, like liquidity is very difficult. Like Push and Pin knows, like it's very difficult to get fills on spreads if you're trading like short dated. But generally, like I like to take spreads on like things I plan to swing because like then I have a lot of time and cushion to like actually close out my trade. But for me, like I'm a scalper, I'm a day trader, like I just have to be in and out like very, very quick. So like I don't really trade spreads as often. But like Meta, like earlier in the week, I took a spread and I closed it for 300%. And then MicroStrategy for next week, I took a spread. And a lot of times, like I leverage spreads if I'm taking a speculative swing trade where I see on the VEX that there's massive upside potential, but premiums are very, very expensive because I want to buy 3 to 4 weeks out, then I'll go ahead and purchase it as a spread because it significantly reduces my cost basis. Vid position is short form content and long form content. Anything that helps drive traffic and also anything that helps like educate people on how to utilize Heatseeker appropriately. Yeah, NDX is fucking easy to blow your shit on, dude. Like it's crazy. Yeah, NDX, like just leave that one for the pros. Like it's very difficult to trade. Like I think there's like one person that really, really likes to trade NDX, and the only reason they like to trade it is because it's so easy to pump because the liquidity on it's very bad. So the moment they enter and then they alert it, because people are chasing the ask, they can easily get out instantly for like 20 to 30% gains. Like even if I wanted to, I can pump NDX contracts. Like I can literally buy like 100 contracts and then I can alert it to like 8,000 people and then because I know idiots are going to market order on it, I can immediately sell a limit sell, set a limit sell and like I can get out for like 30%. I can literally dump like a fucking 100K into NDX calls and then alert it and then instantly get out for like 20% gain. Like I can literally do that. I just don't because it's like it just goes against my moral compass. Like if people are alerting NDX contracts, like they're fucking pumping their shit. Like you got to be dumb to not understand that and know that. Yeah, I am. I sold my soul to the market dealers, guys. Like that's also one of the reasons I stopped alerting because like when I was alerting, like sometimes I would actually unintentionally pump contracts and like I just can't do that. Like I just don't alert anymore for that reason. Yeah, no problem, Woody. Yep, thanks, Venky. I'll see y'all later. Hopefully that session was helpful. Like we'll do some more of these, but I'll go ahead and post the recording later as well for people to go over, but that pretty much goes over like everything. Like really like listen to everything, like take it to heart, like put in the time, put in the discipline, put in the effort. Like you will make money, you will become wildly successful, but like you've really just got to put in a lot of time, ask a lot of questions and like just keep on watching the boring ass videos over and over again. All right? All right, I'll talk to y'all later. If you guys have any other questions, just keep on asking them in the chat in Owls or Asgard. All right. See you guys later. Thanks for joining.